Hello, I thought we'd take a look at US stock markets this time around, particularly the S&P 500. Is the great 2023 bull market in stocks finally over? I think it's a tricky time. We've seen a fairly sizable decline over the last month and recent weeks. So I thought, let's take a look at it in a bit more detail. Is this a buying opportunity? Or actually, that's it, we're done, and these markets are going to have some proper sell-offs into the end of 2023 and into 2024 as well. As usual, we'll talk about some of the recent news around these markets, then we'll jump, have a look at the charts and see if there's a trade to do. I'll talk about my own trading for the month so far as well. It's been profitable, but it's definitely been, I found it, a harder month than perhaps May, June, July time, because I think we are seeing, because we are seeing some of these major trends that we've seen this year, perhaps reversing. Anyway, more of that when we look at the charts. Before we get into it, just a quick word about some of the other stuff I do. I run a trading course. I've run it for a few years now. The course covers both a medium term and a shorter term approach to trading. I've been open about the performance numbers on YouTube over the last 12 months. If you go to my website, davidjonestrading.co.uk, you can see more details on there. Any questions, you can send me a message via the website. I've been running this WhatsApp group for much of this year as well. It used to be just for people on the trading course. I've opened it up to anybody now. You can join it for a month to try it out and see what you think. If you use the code YouTube, you get a 20% discount off the first month. It's an update from me every day, the markets I'm watching, trades I've got running, all of that sort of stuff, and Q&As throughout the day. So all the details for that are in the description to this video. And if you use that code, you get 20% off your first month's subscription. Right, let's take a look at it. Let's have a look at this S&P 500 in a bit more detail. So at the moment, the time we're recording, 27th of Feb, 27th of September, we've still got a few more days left till the end of the month. But so far, this is shaping up to be the worst month of the year so far for the S&P 500. It's down by around about 5%, I think, for the month so far. We've got to go back to December of last year to see a worse month for the US sort of benchmark index. Septembers have been bad. The last couple of years, we've seen poor Septembers for the S&P, and this has been the case again this time round. So what's spooked markets? We're back to inflation again. We heard from the US Central Bank, the Federal Reserve, the other week that it didn't change rates, which was expected, but it did say that it was prepared to keep the current level of interest rates at a higher level for longer than the market was initially expecting, because perhaps inflation is proving to be a little bit more stubborn than the central bank first thought. So this obviously has unnerved markets. We knew last year and coming into this year that the interest rates was going to be the weapon to try and beat inflation. We have seen inflation fall in the US, but with the central bank saying, well, listen, we might be at this rate for a bit longer than you thought, is never going to go down well with markets, because this could mean obviously a weaker economy going forward. And if we have a weaker economy, if consumers are nervous, they've got less money in their pockets, this would have a knock-on effect for corporate America and for corporates around the world. We could see these companies making less money if we stay in this relatively high for recent years interest rate environment. So this is what's put pressure on markets. And we have seen a fairly sustained sell-off for stock markets over recent weeks. Like I say, this is the worst month so far this year for the S&P 500. But markets don't move in a straight line. And the difficult thing, for me at least, to figure out at the moment, is this sell-off just a buying opportunity? And we see these markets ramp their way back up into the end of 2023, or actually is the top in? We've had a major top for stock markets, and that's it. We now need to switch, or I need to switch, to selling rallies in stock market indices. We're coming up to what's a big technical level on the charts for the S&P. So without further ado, let's get into it. Let's take a look at the S&P 500 in a bit more detail. Is the trend over for this year, or actually is this a buying opportunity? So this is where we are on the S&P. This is the daily chart going back to the summer of last year, last August. But what's of interest to me, this big trend that we've been in since October last year. So we're 11 months into this. We saw the market push as high as about 4,600 at the end of July. And since then, we've seen this decline. Looking at the market now, it's dropped from 46 below 4,300. So we've seen a 300-point decline in the S&P, about 7% or so off those highs. We have had declines before. If we go back to February of this year, the market dropped from about 42 down near 3,800. So we saw nearly a 400-point decline back then. So we've got to go back, about 7 months or so to see the sort of decline that we're in at the moment for the S&P. And of course, back then the market did stabilize during March. We've seen it bounce back out to the highest levels since about March 2022, and we've seen the market sell off. So what happens next? First of all, we have broken what I think is a big support level. So we had these lows back in June, late June, around 43.29. So it held the market up in June. The market moved out to fresh highs for that recovery, sold off again. Into August, we saw that level hold again. So it did prove to be something of a big level. But over the last couple of days, we have seen this level broken. So that is, I think, one concern for anybody who's still quite bullish on stock markets, that we've taken out pretty major support. But we still have a fairly important support level in place. We've got this trend line, which arguably isn't confirmed yet because we've only got a couple of touches on that. But I think that is the trend for the S&P from October last year to where we are now. So it's coming in around 42.40. So if the market is going to rally from anywhere, this seems to be a pretty good level. So for me, it's sort of perhaps crunch time in the next week or so for this market, next week, next couple of weeks, to see what goes on down here. So I wouldn't be a buyer just yet because it was only yesterday. This is a daily chart. It was only yesterday we saw this fairly sizable sell-off in the S&P. So for me, I don't want to be catching a falling knife today. I'm quite happy to wait it out and see what happens down at this level. Do we see the market trying to build a base? For fans of oscillators, if we have a look down here, this is a 10-day RSI. The last time this oscillator was oversold was in August. It did end up marking a sort of interim low for the S&P, and here we are again. So the oscillator has gone oversold over the last week or so. We have seen the market continue to slip, but we are at an extreme. So let's see what happens down here. But for me, this let's round it up and call it 4,200. Okay, let's use that and say if we do see the market slip below here, then it does start to look as if the run that we've enjoyed for all of this year and a bit longer is over. I'll show you some of my own trading for this month, then we'll look at things a bit shorter term. So far for me, it has been a profitable month. It's not been as profitable as some of the other months. I've shown this account before. I showed it from May through to July, where it started with £5,000 account and ran it up to the end of July. Have a look at one of the later videos from the end of July to see where that ended. But so far, it's up for the month, this account that I use for YouTube. So I've closed. If we have a look at some of the numbers here, the win rate is 53%. So only slightly more than half of the trades have been profitable in the month. The risk reward has been 1.57 to 1. So if I've lost, for example, $100, £100 on the losing trades, I've made $157, £157 on the winning trades. And I'm sure if you know anything about trading, that balance between risk versus reward is really important. So on the month so far, I've done 17 trades, 9 winners, 8 losers in this account. It's up on closed profits. It's up £1,500. The risk per trade I've been taking this month on this account is £350. So if any trade goes wrong, it loses me £350. If any trade goes right, I'm trying to make a multiple of £350. So it's up slightly more than 4 times the risk per trade taken on the month. My risk is typically 2% of the account balance. So it's up about 8% on the month. If I could do that every month, I'd be quite happy with that because you're going to double your account and more every year with that sort of progress. You can see the difference that big winners make. A big winner for me was a short sterling Aussie trade That made almost 3 times the risk on that. There's a NASDAQ trade in there, a Bund trade, and the losers you see all stop at 350. So a profitable month, which is always good. So far, the month hasn't ended yet, but definitely for me, harder work than some of the months May, June, July when I was talking about this account back then. Let's take a look at the S&P again in the short term. So this has been the decline. This is the hourly chart now from mid-September, and you can see it's been fairly relentless. And the market was up around 4,500, and we've seen just the odd rally along the way. I've been waiting for a half decent rally to try and get short, and I haven't managed it. So I've missed out on this slide in the S&P. The market, as I'm recording this, is just opening, and again we can see this current hour it's in, it's currently getting hit again. So still really weak on the hourlies, and this is the reason why I'm not in a rush to buy the S&P at the moment, even though we have this trend line coming in. You know, markets can take a bit of time to turn around. If we go back to March this year when we saw that last big sell-off, you know, it was a good week of chop before the market actually got a move on. So I'm quite happy to be patient here. 4,200 for me is the level to watch. It's only 80 points or so below where we are now. Are we going to see this trend line come into play? So it's perhaps the hardest bit of deciding what to do for this year for me when it comes to the S&P, and when I'm not sure, I'm quite happy to sit it out. I do think we will get at least one more push up. So I do think we are going to see something like a bounce in this market over the next week or so. But like I say, I'm not going to try and second guess the market. I'm going to wait for some sort of confirmation. And at the moment, we just don't have it because it's a market that is still weak. But let's see how this trend line performs over the next week or so for the S&P. And just one last thing, I thought we'd have a look at a moving average. I'm not the biggest fan of moving averages because they are a bit of a lagging indicator, but I thought, well, let's take a look at a popular moving average, the 50-day moving average. And you can see it did okay on the last major leg up from March of last year when it crossed above that moving average. You know, we did see that run start that ran for about 4 months into the end of July, fell below the moving average in August. At the moment, that moving average is sitting at 44.80. So we'd need a 200-point rally from where the market is now. So bearish from a moving average point of view. Like I say, for me, not that much use when it comes to trading, but I thought it'd be interesting to take a look. So for me, I'm still more about the price levels, and it's this sort of 4,200, 4,240. Does that old trend line come into play again? I think we'll find out soon enough. So that's it for me on the S&P. Tricky one down here. I really don't know. I'm still leaning towards expecting a bit of support coming in and expecting the buyers to step back in. It's going to be an interesting few days. We'll have a look at it in a bit more detail in the live stream this Friday, 2:30 UK time. We'll have a look at that and have a look at how this market has maybe moved over the couple of days into the end of this week. To find out more about some of the stuff I do, the training courses and that WhatsApp group where you can get 20% off for the first month, go to the website, davidjonestrading.co.uk. But we'll leave things there for now. I think it's a really interesting time in markets, definitely a harder time for trading. It can't be straightforward all the time, if any of the time, but really interesting to see, well, do we see the buyers come back in at this level, or is that it? The path of least resistance is going to be down. We'll see what it looks like in a live stream. We'll have a look at it again in a couple of weeks in one of these videos, but for now, we'll leave things there. So until the next time, good luck with your trading.